G'day guys, welcome back to Mango Invest. In this video we're going to analyse another dividend stock of the top 100 high dividend stocks from Macro Trends, which is in this video Campbell Soup. This is a part of a long-term series I'm doing by analysing all these 100 stocks just to see whether or not I want to buy it, and then therefore you can see if you guys want to buy it as well. So looking into seeking out for Campbell Soup straight away, you can see it's got a dividend yield of just over 3% there. Okay, not too bad. Although looking at the 5-year growth rate, it's looking at 1.12%, which, at least they are growing it. But, when you look over the dividend growth of 0 years, okay, they're not very consistent in growing that dividend every single year. They've got an annual payout of 37 cents every single year, which is very low. And then, they're paying it quarterly. So, overall, not the best figures straight off the bat, but we'll continue to look into the dividend history. Right, so here we go. They've been paying a dividend consecutively for 3 years, okay, but they haven't been growing it of those 3 years. So if we go down to the 10-year history, okay, it's a little bit hit and miss. Looks like they've missed a dividend there. Okay, scrolling down, you can see in 2020, they were paying at 35 cents. They've now upped it in 2021 to 37 cents. And 22 and 23, they've remained sort of consistent there. But let's look over to the dividend growth just to see how much. Okay, straight away, right, we've had a dividend cut in 2018. Okay, so not looking very good. Now moving over to 2015, right, they didn't grow it at all. 2016, 3%, 17, 8%, and then 2018, they've had to reduce that by 25%, which is not looking good. And in 2019, they upped it by 33%. In 2020, they've kept it the same. And then most recently in 2021, they've only upped it by 5% there. So far, not looking very good. We'll continue on to the financials of the company, and we'll see how they're tracking there. So straight on to the income statement. Okay, the revenue. Let's have a look at this. All right, so a massive drop in 17 and 18, and then from 2019 to now, they've maintained some level of consistency of just over $8 billion. Let's see how much that revenue has cost. Roughly 5 to 6 billion in recent years, leaving the gross profit sitting around, at a high of 2020 of 3 billion. But now they're sort of, reducing that under, $2.8 billion. So not the most promising so far. Let's look at the earnings per share. 2020 had a massive spike. Now this could have been because of the pandemic, people were resorting back to more cheaper foods. Campbell Soup, they offer a lot of cheap sort of products for big families. But as the years go by, 2021 and 22, they're just reverting back to the 2014, 2015 sort of levels there. So not good at all. Let's move on to the balance sheet just to see how they're looking here. All right, so cash on hand. Okay, very inconsistent again with all that revenue in 2020. They've had a little bit more cash on hand, but now they've gone even below 2016-17 levels. Assets versus liabilities. Okay, so we're looking at 11 or just under $12 billion worth of assets compared to your $8.5 billion worth of liabilities. Okay, so that's not too bad there, and there's some sort of consistency with these total assets. And liabilities slowly reducing, okay, which is good. That's what you want to see. Now let's move over to the cash flow statement. All right, so cash flow from operating activities. All right, I've got a little bit of consistency with the reduction in 2021. Okay, roughly sitting around that $1.3 billion with capital expenditures fairly consistent, sitting around the $300 million mark, making the free cash flow in 2022 roughly at $9 billion. 2021, the previous year, being at 800 million. So at least there is some sort of cash there for them to pay out their dividends to shareholders, which is what you're seeing now. So over here, you've seen like a nice slow increase of dividends there, but as we saw from the Seeking Alpha statement, they're not growing their dividend at all, and they have had some sort of cuts in the past, which would indicate in the future that they're going to most likely cut their dividend again. So, I mean, there you have it. That's my analysis on Campbell Soup. You know, would I buy the company? Definitely not. I'd say this is probably, I don't even see why this would be in the top 100 dividend stocks in macro trends. You know, very inconsistent in paying their dividend. They've had dividend cuts. Their growth rate is very inconsistent. You know, the negative 25% in a year. They're not growing at all in most years. And when they do end up eventually growing it, it's only by, 2 to 5%, which there's definitely a lot of bit more better companies out there. Again, such as, McDonald's, Coca-Cola, Costco, things of that nature as well. So let me know your analysis on this stock. Would you buy it? Would you consider it, an inconsistent dividend stock? So if you did like the content, make sure you subscribe and thumbs up. It really helps out the channel, and I'll catch you next time.